If there is an account of $10,000, then $200 or $300 will lose. It is not a problem. They will be easily covered. If you lose is $500 or $1,000, it will take a lot of time to cover it, and this will damage your psychology and your account. I am telling you at the very beginning of the course, that you should manage your risk. You should not overtrade and do not take too much risk. So what we learn in VSA series, number one is climatic action bar. This climatic action bar is my favorite strategy, my favorite candle. I daily found this climatic action bar and I daily execute the trade on climatic action bar. Okay, you must try climatic action bar. Climatic action bar is very important candle. Okay, now the next is two bar reversal. Two bar reversal is very important. Two bar reversal candle give you a huge profit. Okay, number 3 is effort versus result EVR, and number 4 is shakeout candle or up thrust, and number 5 is no supply and no demand candle. These two candles is also my favorite. These 5 things are very important. We will study these 5 things and use them in our trading setup. These 5 things are so important that they can give you a daily trading. These 5 things will help you on the big time frame, 1 hour and 15 minutes, 5 minutes and 3 minutes. Many of my new students ask question where these 5 things are applicable. So my answer is that it is applicable in every time frame. You can apply these 5 things in every time frame. You can use it in every pair, maybe it crypto, forex or stock, but the condition of it is that first you have to do analysis, technical analysis, fundamental analysis, and then you have to apply these 5 things. These 5 things will help you in every way. This will help you to find the trade in US oil. This will help you in crypto. This will help you in forex. This will help you in gold. But my advice is that if you want to succeed in the trading field, then you should work on it for 1 pair or 2 pair. That's it. Don't work more than 2 pair. You should take 1 pair in gold and 1 is Bitcoin. An example of this is if you have an old friend whom you have to know for 4 or 5 years, so you know its character, you know its moves. In the same way, you will know the behavior of a 1 pair and its move. Each pair has a different pattern and different move. Each pair has a different pattern and different move. I mostly trade in Bitcoin, gold, and one more pair I like is artificial intelligence coin. Artificial intelligence coin is an altcoin which also added in my watch list. When I cannot find a trade on BTC, I look into artificial intelligence coin. I would advise you to work on only one crypto pair. You only work on BTC and gold and keep an eye on every single move. So don't do something like that. You have started working on too much pair. You go on social media and there are say that it is a very good pair, then you start working on it. Don't do that at all. Okay, you only have to take a stock in one pair. You first back testing whatever paper you are working on. There are too many traps in the market. If you keep looking at this volume, You will save you from traps and show you the right direction. It is not necessary that you work in only one strategy. You can work on two strategies. You can work at RSI strategy. You can work VSA strategy. You can also work on EMA strategy. This is a new strategy that is called BPR strategy, balanced price range. Whatever strategy you use, you must use volume. Volume will give you the advantage of filtering out fake signal. Volume is a king. Volume will confirm you the trade in the right direction. This does not mean that you will always be in profit. Sometimes your stop loss will be hit and sometimes you will lose your trade. When you check your account after a month, your account will be in profit, and you don't have to check it daily. You have to check after a week or 15 days how much percentage in the account has grown. When you follow the rules, manage your risk and take a percentage trade, you will be in profit. Always find the quality trades, not a quantity trade. Now the next is, what is volume in trading? Volume is the total number of transactions conducted in a given time frame. You can identify the total number of transactions, but we cannot access whether the transactions are in a buy side or in a sell side. Whenever a bullish candle forms and there is a high bullish volume below, it does not mean that the market will go up. Or if a red candle is formed and the volume is large below, it does not mean that market will go down. This is a big misconception. There is a default setting in the trading.com. Whenever a green candle is formed, the color of the volume below will also be green, and whenever a red candle is formed, the color of the volume below it will also be red. This means that a green candle should not be a thing that the market will go up, and the red candle should not be a thing that as market will go downward. If a large volume is generated, you understand that some activity is going to happen. If the volume is running normally, go to sleep, because there is no investor and big institution involvement in the market. So the volume below was not telling you the direction, it was telling you the number of the transaction, how much volumes were come in it. If there is a big gap, it means the investor has entered it. But volume will tell you the number of transaction, but it will not tell you whether it was buy or sold. This indicator only tells you the volume of sell and buy. This does not mean that if a buy volume comes up, buy it. If sell volume comes up, sell it. This does not mean that. So what we have to learn, we should do if the volume of the sell increases, and what should we do if the volume of the buy decreases. What is spread? The spread is the size of the entire candle, which we call the spread. So first of all, we check the market trend, we check the market structure, and then we analyze the volume and set up our trade. This is called volume spread analysis. So next is basic rule of VSA trader. A smart trader always buy from lower price and always sell at higher price. It like that a smart money will always buy from lower price, sell from higher price. In a trading term, we use premium prices for higher and lower prices respectively. This is a simple and basic rule of VSA.